Hello and welcome to the Capital Link Master Series podcast. My name is Jasel, Chauhan. I'm Head of International Finance and a partner at Dickinson. I have the pleasure today of interviewing Bill Guo, who's Executive Director of ICBC Leasing. We're going to talk about a bit about Chinese leasing and what ICBC Leasing have been doing in the market recently. Before I start, I should mention that the podcast will be available on capitallinkpodcast.com, and I should also add that it's a discussion is for information and educational purposes only, and not intended to be investment advice. Full details of the legal disclaimer will be available on the website as well. And now, just to start, I'll briefly introduce Bill. Bill joined ICBC Leasing in 2013. He's now an Executive Director of the Shipping Business Unit. Bill is primarily responsible for the leasing business of the container and dry bulk sectors. Before working for ICBC Leasing, Bill worked for the Maersk Group for over 10 years with management positions in a variety of different countries. Bill's a financial specialist with in-depth knowledge of the container shipping market business as well. I think on that note, Bill, actually, if you're able to give us a little bit more introduction and background, both in respect of ICBC Leasing and how that fits with the wider bank as well, that would be helpful, I think.
Thank you. Thanks for the introduction. So, I joined ICBC Leasing in 2013, but ICBC Leasing was founded not far from the day I joined, and ICBC Leasing was founded in 2007 November. So after just the beginning of the financial crisis. And so right now it's only 12 years, and ICBC Leasing from scratch to zero. Right now, in terms of for the shipping portfolio, is about $12 billion in the portfolio, and from 0 ships, and right now about 300 ships. So 90% the portfolio, for the shipping side, is a US dollar asset. So all the customers are around the US and Europe, also in Asia. Of course, the customers in China as well. And ICBC Leasing, is 100% owned by the ICBC Bank, and ICBC Bank is the largest bank in China, maybe also in the world as well. So, and in the past 12 years, especially the 5 years, I think ICBC Leasing in the shipping portfolio has been growing very fast. Globally. So that's right now. That's the main reason I have the chance to have access the Capital Link, this global network.
Well, it's a pretty impressive introduction. I don't think there are very many players around the world that could certainly start with a kind of description that is that impressive. And certainly, it shows how that level of growth in what is relatively a short space of time when you compare the levels, whether in the number of ships or the amount of finance itself. It certainly makes me wonder. We'll speak again in a year, 3 years, 5 years, and the direction that the business is going. At this point in time, that's something that you see that business thing continuing to grow and develop at those levels.
Sure, because right now I think for the ICBC Leasing and the shipping portfolio, we are about 1/3 of the whole ICBC Leasing portfolio right now. So the ICBC Leasing banks and the ICBC Leasing financial institutions have their own target. So the leasing side have to keep, from the shipping side, we have to keep up the whole corporate growth rate as well. And every year is about the 2-digit growth that hadn't been changed for the next 3 or 5 years planning. So I would say in the fundamental and the target for us and the portfolio, we hope we can reach maybe $20 billion in 3 or 5 years, depends on how the global economy. We don't want to set up very aggressive target, but also we don't want to set up too slow targets as well either. In general, I think right now the Chinese banks are very good in the capital right now, so they do have the spare capital to invest. I would say some international good opportunities. Shipping, no doubt, because it's very international, also very centralized, has a very long history in the shipping finance. That's why the ICBC Bank choose the shipping as a major investment portfolio for the leasing side. That's why I said about for the next 3 years and 5 years, we still have a very fast growth pace target.
So, and in terms of actually, I suppose, bringing it back to this year, we're almost close to the end of 2019. And I think certainly, looking back at the kind of the year for ICBC Leasing, that I think it started very positively, and certainly at the beginning of the year, a very positive outlook. How do you see that the year has been? You're still very positive. How has 2019 been for you?
That's a very good question. I think in the beginning of the 2019, we were very positive, and we thought about, because close to the IMO 2020 regulation, so 2019 should be a good year. But in the middle of the 2019, something was not that positive, and something had happened. Also because especially the dry bulk side, also because the financial, I would say the trade war issue, and so the container sides are also falling down. But growing further, I would say in the quarter 3 of this year, things become much better, a little surprisingly better. In the tanker side, also in the dry bulk side, the LNG also is good as before. So suddenly, right now in the quarter 4 of this year, people feel like this 2019 was a good year, and everyone should be happy. So so I would say when you forecast in the beginning of this year, the results will not always be aligned. So I would say that I think that's the attractive for the shipping side, because they never forecast what will happen in the future. Yeah. It's always something would be happening outside your surprise. So that's the good point for the shipping, right?
No, I think probably most on the financing, whether the leasing side or the more traditional bank finance, I think probably by and large amongst most of the sectors within shipping, it has been a bit of a roller coaster ride. That even in most kind of discussions, that you can see that there is a particular view, whether at the beginning or the start of the year. But it's strange to find a year where you almost have a little bit of everything. That so there's been good parts of the year and maybe some bad parts of the year, but no, developing. And I suppose in that context, both in terms of whether as the kind of the sector and the leasing side has progressed throughout the year. How have you seen the leasing business fit with competitors, both within Chinese leasing structures itself, which obviously has been doing extremely well and certainly filling a large gap in the financing market, but even within the leasing side, there does seem to be competition, whether in Europe or Japan as well.
We try to not use the competition in this word, but more on the cooperation. So, and we think of the banks, and first of all, look at the traditional banks, the European bank, the Japanese bank, or the other Asian banks. They still are strong, I would say, the business and the partners, and I would say in overall shipping circle. So we still need to raise the senior loan from them, which we can provide the equity to our the ship owners to buy the new ships, for the second ships. So we are in the same chair right now. We never ever have the direct competition, for majority project. But on the other hand, we have to say, and for other the project itself, we do have some slight competition. But the different compared with the traditional banks, we have a little bit higher leverage, and also our financial structure is more flexible compared with the bank structures. So we can tolerate some kind of, I would say, the customers and maybe the corporate finance not as strong, but sometimes maybe the asset itself has some kind of different value evaluation. So we take a little bit different strategy. We look for more from, I would say, the whole shipping circle instead of only for the corporate structure and the balance sheet, the ship side itself. So again, in summary, we do things more creatively and more innovatively. For the competition itself in China, for the other Chinese leasing house, we do have some kind of competition with them. That no doubt, because due to the success, from I would say the profit return by the ICBC Leasing in the shipping portfolio, other Chinese leasing houses try to catch up on this, I would say, this market, especially for the Western banks and the withdrawal from the shipping finance, is give enough big room for more players from China into this room. So that's why other Chinese leasing houses come this I would say the market. But I think right now we are, I think it's okay, because the room is big enough, so everyone have put themselves into this room by using their own technical side. So
a healthy competition in that sense.
Healthy competition, exactly. That's a very good word, yes.
And I suppose in that sense, and you kind of touched on it in terms of how, I suppose, whether the leasing houses in particular or in the context of ICBC Leasing, that some of the advantages, and obviously I would think it's fairly clear over the last 2 to 3 years, maybe slightly longer, there has been quite a surge in leasing transactions, something taking place around the world. And you mentioned things like higher leverage, and obviously they tend to be longer term deals as well. Often pre-delivery may be involved in that. But I suppose when in that context of obviously having healthy competition, and also everyone has their own kind of space within a very large kind of market. So I suppose, how do you see, what is it that is the right things to make a leasing deal work that you see?
That's very important. It also depends on what customer need. Again, so as I explained, I think for the leasing structure is more tailor-made compared with the bank loan structure. So bank loan structure more standardized, and being this kind of history more than 100 years, so and it's very standardized, had a very long history. But the leasing structure is just pop up maybe in the past 5 to 10 years. So everything has been tailor-made. Really depends what customer need. So some customer need maybe low leverage and low cost, which leasing can provide. But some customer need the loan and the leasing period, maybe and the high leverage, a little more expensive price, which is fine for them. And the leasing house can also provide for them. But some of them, say the cargo owner, for example, like greenhouse, like maybe the mining company, they need more, I would say, just the town is supplying, not just to have the ships. For that perspective, we offer them the operation leasing, which means that the leasing house have to take care of the residual value of those ships. After 10 years, after 15 years, the leasing house can take back the ships to handle by themselves. Can leave, just provide the tonnage for the customer need. Very stable rate, no change. So, for those and the customers, they can forecast their, the transportation cost. So it depends on customer need. Then the leasing house would work out, I would say, personal solution for them.
Okay, that's interesting. So there seems to be, in that sense, quite a bit more flexibility than, say, perhaps the traditional finance side, where there has been a little bit more, I suppose, of the kind of cookie cutter approach of, these are our standard terms, or here's a standard loan, and here's a mortgage. You vary the typical provision. So there seems to be a lot more of a kind of tailor-made element. I think obviously there's a link to kind of the longer term there. Is that something that also links to it being maybe perhaps better suited to things like pre-delivery finance and the purchase of new buildings?
Yes, it does. So, and again, some customers like they don't have enough equity for their new building projects. So they only put maybe 5 to 10% in the down payment. So they need the pre-delivery finance. So leasing house could help them to do these kind of structures. Because for that kind of structure, we look more for the ship asset itself than the customers and the financial statement. So we can provide them the whole. Of course, the shipyard is also very critical as well, because for that kind of structure, we need the shipyard to provide the refund guarantee. So we also can, sometimes we can convince the shippers to move their shipbuilding from overseas to China. From some perspective, we can help the Chinese shipbuilder in the shipyard also to enhance their capability to support the global shipping customers' need.
No, it's interesting, and I think, from what I can tell from that, it helps to bring in kind of either support businesses, whether within ICBC as a bank, or certainly with the relationships that will exist with Chinese shipyards, and as you said, the refund guarantee aspect as well. So it's something that can help that type of transaction more from different elements. And I think it also reminds me of, to some extent, a bit of a parallel with on the traditional banking side, where there would be a focus, for example, say US capital markets, where there is a tendency to kind of be able to provide the facilities, but also assist on the investment banking side, and often the more products, if you like, or assistance that you can support the borrower and the owners with, it actually seems to help to work to help the parties throughout and help a transaction along. Especially if it's a tougher transaction or a large transaction.
Exactly, yeah.
And I suppose linked to that, in terms of the ICBC portfolio itself, as far as I can tell, it's actually fairly well spread. I think probably looking at some of the last statistics that were available, containers and dry bulk probably close to about half of the portfolio.
That's right, yeah.
And in that sense, I was actually going to ask you a question of where do you see kind of the sweet spot in terms of the market, but it almost seems that the portfolio is so diversified that maybe that itself is the sweet spot, that actually having a diversified portfolio is actually what makes ICBC leasing more comfortable and versatile. But Is there something that you would call a sweet spot in a sector that is hot or less so? Or how does the leasing arm manage that approach?
We don't call this kind of the segmentation of the sport part, but we more call them the market need. So it really depends on what's the market need. For example, if back to 3 years ago, in the dry bulk maybe take almost half of the whole, I would say, the portfolio. But the last 3 years, and LNG demand so strong, so we really put a lot of resources and also the equity into the LNG market. So right now, LNG take about 1/3 of the whole portfolio because of the market that they need this kind of the investment. Also needs the, I would say, the senior loan for these kind of structures. So we don't really judge which ones should be better. We more follow with the market they require. And right now, I'm saying again. So that's why in the past 10 years, growing from 2007 until right now, almost 12 years already actually. So we split out, all these kind of major, I would say, the shipping portfolio, including the dry bulk, container, gas, the tankers, but also the cruise shipping. The cruise shipping actually right now become more popular in Asia. We follow with the Western market. Now the more Asian people, also Chinese and I would say older generation, they start to try the cruise ship. So this kind of the new ships also start building in China. That's why the ICBC Leasing also try to follow again what's the market need. Okay. So this kind of things, and consequently build up this very evenly build up across whole the segmentation for the shipping sectors.
I mean, and I suppose to some extent whether that's something that comes with, obviously, as you said, the bank is, I think, as you mentioned, one of the largest in the world, if not the largest. And certainly on the leasing side, being able to have that size also links into being able to have that diversity as well. But no, it's very interesting to note that you can actually take that little bit more flexible approach and go where the investment needs are, which I suppose is a little bit more difficult with a traditional bank, but may well, for example, say they don't do cruise, they don't do containers, for example, and I suppose it can potentially be more cumbersome. And for that approach, I mean, I suppose at this point in time the portfolio is already very diversified, but is it that it's something that it has that flexibility, or is it that it needs to be assessed on a kind of regular basis, or it's big enough to, as you said, kind of go to the market that's hot at that time?
Because right now, because the size of the ICBC Leasing itself is already very big, so anything we do would have a very big impact for the shipping finance market. That's why we don't try to only focus on one segmentation, because if we do that, it would be give very big, sometimes negative, sometimes positive market information, or maybe the trend to this kind of the portfolio, which also impact other Chinese leasing houses as well. So we try to say, okay, we're interested for everything. As far as the customer is good, the portfolio is good, the ship size is good, we try to do everything.
So, and in that sense, I mean, I suppose when you are looking to assess counterparties, I mean, to my mind, it seems that you have the ability to actually have a very broad spectrum of counterparties, because first of all, you're almost available in almost all of the sectors, and each of those sectors will maybe have different tendencies and different locations. But in the types of counterparty that you work with, is it the same? Is it that parallel that it's from small owners to listed owners with hundreds of vessels, or is there any approach to the kind of types of deals that you do, counterparties that as you said, whether it's listing companies or it's corporate guarantees or new building orders, what really helps to build a strong case to say actually these counterparties are a perfect fit for both the leasing structure and ICBC Leasing?
Yeah, it is very challenging question. Sometimes we're also internally we try to review this question as well constantly, because we want to see, okay, who is the ideal customers. You try to find the portfolio and say the mock-up model, so we can share with the new bankers, because they try to learn who is our real customers. I would say there's no the ideal customers. All the customers could be the customer for ICBC Leasing. It more depends on what they need, or also what we could offer to them. So right now, the most of the customers is the top customers in the list, or the top and the dry bulk customer, the top 5 or top 10 the container shipping company. Also for LNG customers, all this majority is the publicly listed or maybe well-known customers as well. So because those names is well-known, so for us it's easier for us to access them. for some smaller customers, we do like to do business with them, but because their reputation not very high, so we have to take more time for us to understand what they really need. And due to the limited resources, we have every year we have to do about $2 or $3 billion in investment in the shipping portfolio, and we don't have much resources to really check all the customers. So that's why we have to sometimes we have to focus on big customers or the public lease customers. But again, because all the information is more easier to access, especially for the public lease customers, and their all information they publish on the website. So for us, we can have a quick check and say, okay, that's good. Potential good customers, we can talk. Some smaller customers, family-owned customers, their financial information might not be, I would say, consolidated, ready. They still follow with very traditional trend, use the one single ship to be pledged to get the senior loan. So this kind of model take a longer time for us to analyze their ship value, or also to analyze their strategy, or also their family needs. So they take a longer time. So for us, maybe that might be not our ideal customers, but still we want to take time to work with them if we do have time. You see the point? Yeah. So so sometimes sometimes more breakdown from top to down. Which means we have the over budget. For example, maybe in the $3 billion, and in 2020, just an example, we break down. So depends on the collection and analyze, and maybe other third party analyze what's the each segmentation they need. So break down the budget to each segmentation. Then each segmentation, we choose maybe top 20, top 10, the customers. What's their new building planning? What's the second purchasing planning? Then we just to evenly break down I would say the budget to fit their need. Okay. Then we talk to customers individually, say, okay, do you need this kind of I would say the budget, or you have a separate plan? You have any other I would say contingency plan for your say bank loan or other priority plan? If they don't have, why the leasing just become your one of the options. So that's the solution right now we work on with those top customers.
Which is very interesting, because it also seems to have a very kind of market-driven approach to it, which
exactly
to some extent seems very, very logical in the sense that actually trying to decide or determine, okay, well, this is the perfect type of customer we want. Actually, it's a lot more versatile because it's responding to the market needs. And I think also what seems, I suppose, fairly logical, and this would apply both in terms of bank financing and leasing, that actually having a bit of a critical mass actually provides kind of economies of scale in terms of work and the work being done, because actually compared to some of the smaller deals, not only will obviously that there will be smaller loans, but actually there's not a huge difference in the level of work that needs to be done. So the ability to have larger deals, you can see the kind of some of the benefits coming through. In that sense, I suppose linked to that in terms of we've talked a little bit about kind of the market sectors and the counterparties as well. One of the things that's recently kind of been announced is that you're opening an office in Greece, which obviously myself being based in Greece for the last 12 years, I'd certainly say is a very good thing. So in that sense, how do you see the kind of the geographies, the sectors developing? And certainly, there's always been a strong relationship with Greece, and the fact that you're opening an office there, and that's something that we'll obviously look to develop work with the Greek owning market as well. I mean, how do you see ICBC Leasing developing worldwide, and what are the drivers there?
I think one thing I have to correct that it's not ICBC Leasing try to open office in Greece, but it's ICBC Bank itself open office in Greece. I think of course it's Greeks and the shipping hub, no doubt, and that's why I think that ICBC Leasing will follow up with ICBC Bank to support their business in Greece market. Another reason because, and also to support I would say the China strategy and the One Belt One Road. Also Greece is so strategical and for access to the European market. That's why the ICBC Bank is supporting the Chinese and the corporation to use the Greek hub to access the whole European market. But the next step, the leasing would follow with the bank itself also, because then I would say 70% of the customers are related with the shipping customers in the Greece. So the leasing definitely have a very big and the room to grow.
So that's interesting. And as you said, the distinction between the bank and the leasing side. So do you anticipate that both on the pure ship finance side and then the leasing side will start to follow? Is there a kind of plan at this point as how you would start to see the kind of the financing business develop both in the Greek market and
I think because the shipping finance, I would say they need a more technical background in the shipping side. So and that's why I don't think the ICBC Bank would start shipping finance very quickly.
Okay.
If they go there, they need some people who have really understand about the shipping finance markets very well. That's why I said about the ICBC Leasing would cooperate with our ICBC Bank in Greece to support with what's the Greek shipment they need. I think for the bank side, they have to support. For them, the majority target focus about the Chinese and the corporation. They already have a lot of investment in the Greece as well. Like for example, the COSCO, the big port there. So they do need the Chinese bank to help them to, for example, like working capital, also the short term, I would say the save loan, this kind of all financial, the service they do need. So there's no direct competition again, but more I would say support each other to provide say one-stop shopping concept for the customer there.
No, and I think certainly a positive step in terms of developing both the network and the business. I suppose on that side, as well as looking at the positive steps, I suppose you always want to be conscious of any potential difficulties and how risk is managed as well. So, I mean, notwithstanding the fact that I suppose the size of and diversity of the portfolio, and also having the largest bank behind the leasing side as well, adds a great deal of comfort. But how do you see? First of all, what do you see the risks in that scenario, and then equally, how is that managed for the future?
Again, I think the majority risk about first about the whole global economy uncertainty. So this will be also impact about the shipping development and for the future trend. Secondly, about the regulation. There's many new regulations will come out, and also the impact maybe the evaluation for the ship asset value. So some ships may not be capable to ship anymore due to regulation requirement. So that's kind of challenge. And the third challenge about I would say the capital. The human capital requirement. So with more and more international and more I would say the specialization in the shipping. So I think not for the China leasing house, but in general, they need I would say the global and the shipping expertise to join the team, also support I would say the whole the global development planning. So that's why as mentioned, in the we do need maybe set up the global not office, but maybe the RAP or also some support function in the in Europe, maybe in the Greece, maybe in Hong Kong, in other countries, other cities as well. So only we have the global team, we can support the global customers very well, because as I said, all the solution had to be tailor-made. So we can't have the tailor-made solution, but only people sitting in Beijing or Shanghai. That doesn't work. We do need the global team to support the global customers.
And I suppose in that sense, and I suppose just touching on how the future will develop. One of the things that has been discussed regularly is there is a need for the shipping business itself to kind of update and develop and change its models. Is that something that you see applying to the leasing model as well? Obviously it's on one hand it's a fairly set and tried and tested model, but then at the other hand it's also a flexible model that is adjusted to the needs of the customer and transaction. So how do you see the future both for shipping and ship finance, but also in the context of the leasing model?
Yes, I think because the leasing model has been working well in the past 5 years, I think maybe also working well in the next 3 or 5 years. But I don't think it will be working forever, So the customers always change, or also I would say the whole global economy situation also change, which means maybe customers need a different kind of financial service. So we have to adapt to the new environment based on what customers need. One thing we are really missing in the past 4 or 5 years is for the capital market. Nobody really have raised the capital from the capital markets very well. So because then the shipping has been falling down, I think 2007, 2008 financial crisis. I hope the shipping since this year, I would say lots of shipping market and lots of shipping companies have started making money. Hopefully with the stable growth for lots of the shipping company, the capital market would maybe build up the confidence back gradually. So hope maybe one day after 3 years, maybe even longer, I would say the capital markets, to become a little bit more welcome, the shipping come back.
I think quite on a nice kind of positive note to see that there are still options out there, and we'll see those develop in the future as well. I think on that note, it's just one last chance to thank you again for participating in the Capital Link podcast, and also thank you to everyone for listening.
Thank you, everyone. Thank you.